Hello, everybody. Brian here from quantlabs.net. Just wanted to go over a few things. Today is May 29th, and just wanted to go over a couple of things. The Instagram account that I use at quantlabs.net, instagram.com/quantlabs.net, will be going private very, very, very soon. If you want to see the charts that I develop, join that Instagram account before it goes private. Otherwise, those that are part of the Instagram account will get all the charts that I do generated from the usual Bloomberg news app. That's why it's going private. Bloomberg's now paid, so I have to pretty well make the charts private and not openly public to just anybody. So if you're in the group for the Instagram, stay in there if you want to see all the charts. If not, once you leave, you're done. And it'll only be available as an added benefit to all my members. Okay, moving on. There's been a lot of news lately with Turkey, Argentina, and lately Italy with how the latest election, and there's just a whole political uproar, and the parties have been voted in, and just sounds like infighting or whatnot. Anyways, there was a lot of charts on that. Nothing came out of it. It is impacting the Eurozone, pretty bad. And apparently it could be a contagion. We don't know. But right now, in these two stories I'm going to show you is some info on the U.S. markets, which I think will have a greater impact, and is what my system caught. So these are, from the system perspective, more important. So I stay true to that. So here we go. We got two articles. The first one is from Reuters.com. The article, for those on the podcast, is Explainer, Rising in U.S. Inflation and What It Means for the Markets. So I have heard words of stagflation over the last few months on the type of environment we're in. If inflation does kick in with virtually no growth, we are definitely in probably a prelude, very early stages of stagflation, which is the next worst thing to a depression. Right now, the economy could overheat. There's some quotes here from this Reuters article. I'm just trying to find. So this article uses personal consumption expenditure, which takes out housing, which the housing market can distort the consumer price index from the Fed. So that's who they focus on here. And it's quite interesting. So right here it says housing has a greater weighting in the CPI than in the PCE. So they try to strip out all these outliers that can affect and distort these indexes. So anyways, it talks about how the economy is starting to overheat, and unemployment's at full employment. So the economy is as good as it's going to get. And basically what's happening is that there's a hope of inflation to kick in to bring up wage inflation, which has not really happened. And I do believe that is just due to the low quality jobs out there. The Fed is in desperate measure to try to make themselves look good, make the economy look good, look the cash position from the U.S. government or Fed point of view look really good. They have retired old data sets which will not show the deficit, which is not ever talked about, rarely, and they say don't worry about it. I would worry about it. And it's affecting the Treasury. That's how the government, outside of taxes, fund itself. So if nobody is buying up the foreign debt, namely Asia, like Japan and China, the U.S. is going to have some funding problems down the line. Don't ask me when, but it will definitely have that. I think we're starting to see some early stages of things that are coming. That I'm not saying it's going to be a calamity, but things are not looking good. This is as good as we're going to get, as I said. So if you want to read that article, by all means. But here, there's a chart here in the SPX Chicago Board of Options. It has dropped off quite a bit. Not sure from March. Supposedly it's down 1.32%. That's the only chart I can find in this article. Now, one of the areas that has been, I won't say, I mean, U.S. has been doing really well, but as the U.S. is starting to export now natural gas and oil out of Texas and other areas as well, that's a good thing. But here's this article from Bloomberg. Let me just see. Bloomberg.com. Article is called "The Gas Market is in Serious but Stable Condition." Now, as you know, I only focus on the charts. Obviously, these charts called April's bullish cold and low inventory numbers have not moved the natural gas futures market much. Now, depending if you are a believer of greenhouse effect, it's making possibly, just depending on your standpoint, I believe it's real. But I do think that winters are getting warmer, so the demand for natural gas is not going to be as high. Here we got another chart on natural gas, and these are U.S. natural gas inventories relative to a 5-year average. So we're a low point in 2003. It was $6.99. In 2014, in April, it was 54%, down 54% from the high in February. The high back in 2002, it was down 42%, as I said, $6.99. And this is the funny thing. The high in March 25th for demand, the price now has fallen quite a bit to $274 from comparatively to $449 in 2015, and 2003 it was $6.99. So the current episode of gas stocks well below average, just the fourth since 1999, also supports the lowest price. So that's what we just talked about. Now this chart here, NYMEX natural gas versus U.S. natural gas inventory relative to 5-year seasonal average, rolling 52 correlation coefficient. So when you look at these lows, in around May, springtime, we'll say, the correlation has spiked a little higher than historical, 0.5828, at 0.205 in 2011, and so forth. I'll let you find the article if you're interested in. And one last chart in this article is natural gas priced in Waha, Texas, difference to NYMEX futures market. So it's been pretty stable up until December 2017 at, it was down 0.3 per million BTU, and now it's pretty well been a downtrend to negative 1.4 million per BTU. So it has dropped off, okay? Oh, we got more charts here. How many more charts? This is the last chart. So here, for EMP stocks, can't remember what those are. EMP stocks, I think they're exploration, not an industry expert here. And then you have the S&P oil and gas EMP ETF here in black. And NYMEX crude oil prices have been up between the agreement of Russia and OPEC. NYMEX natural gas has been very low. This is supposed to jump up, and it hasn't. So comparatively to other indexes, it's underperforming, and you're better off to be in the producers, or even better in the actual contracts for oil. Gas is just not there, and it may come back as cold winter hits and as they ramp up for another cycle of future contracts in natural gas. So it's fairly cheap, and it's been cheap for quite a while, but it's been since a year ago. It's been kind of it's lower than a year ago. So there you go. That's what's been the important stuff on these two articles. I'll put them in the usual spot in my page section right here. Over and out. Later, and have a good day.